Good morning, everyone. Welcome to our webinar. Fogel Potamianos presents Competitive Capital, Investing in Sports and Sports-Related Business. Very excited for our panel today and our webinar. We have some amazing experts with us in this field. So I'm going to go ahead and introduce everyone. We've got Alex Cooley joining us. Alex is the current strategic investments lead at 32 Equity, the National Football League strategic investments platform. In this role, Alex helps manage existing investments in Everpass Media, Noble, Skydance Sports, and Fanatics. Welcome, Alex, and thank you so much for joining us today. We have Dan Holman, Deputy COO for the United Soccer League, with oversight of the league's expansion in real estate, digital strategy, and business intelligence divisions. Previously spent 2 decades within investment and wealth management in London, Frankfurt, and New York at Dutch Bank and Legg Mason before switching careers to focus on the growth of soccer in the U.S. And he is currently near my hometown, Tampa, Florida. Thank you, Dan, for joining us today. We have Jason Somerville. Jason is a founding partner of GW Partners and South Call. GW Partners is an investment banking firm offering M&A advisory, capital markets, and operational consulting services to lower middle market companies throughout the world. South Call is a growth fund and brand accelerator that invests in and advises lower middle market consumer products companies throughout the world. Prior to founding these firms, Jason was an investment banker with Bank of America, the head of capital markets for Bayview Asset Management, and the owner of multiple operating companies in the consulting, aviation, construction, and agriculture industries. Welcome, Jason. Thank you for joining us today.
Thanks, Christina.
And we've got Constantine Potamianos. Constantine is the co-founder of Fogel Potamianos. He is an experienced business lawyer who has counseled public and private companies on a broad range of corporate and securities matters, including business entity formation, public and private offerings, mergers and acquisitions, securities registration, SEC compliance, and corporate restructuring. And as I like to affectionately refer to him here at the firm, he is the sage full of wisdom and great ideas. Welcome, Constantine.
You are too kind, Christina.
And we also have Jerome Fogel. He is also the co-founder of Fogel Potamianos. He's known as the deal maker and innovator in the legal community. He represents successful corporations, venture and hedge funds, and sports superstars. Jerome has a 360-degree view of deal making as he represents emerging companies raising capital, venture funds deploying capital, advisors and investors, and private companies in mergers and acquisitions. Good morning, Jerome.
Morning. Great to be here. Good afternoon for those of you in the East Coast.
Good afternoon. Too. Yeah, well, it is good afternoon. It's 12 o'clock. And I will be your host. My name is Christina Lowe. My husband and I have a podcast called The Download. And I previously worked in television production, reality TV for the last 10 years. And I am now part of this amazing team. And I just want to welcome everyone today to this webinar. And if you are not able to stay with us the entire time, don't worry, we'll be recording this and we can send it to you when we're all said and done. But let's get right to it. Competitive capital, investing in sports and sports-related businesses. This is an interesting niche we're going to be talking about today. Very excited. And we had our call this week just kind of getting into some of the current events that are happening in this area of investing right now. And Dan, you brought up some amazing things that were happening in the news right now. You talked about the San Diego deal and expansion team, and would just love to hear more about some of that and get us kicked off.
Well, thanks, Christina. Pleasure to be here. Thanks very much for the invite. And yeah, I mean, obviously, I don't think we can start talking about sports or soccer, particularly in the States, without talking about Messi, right? Obviously, right. Very current. We've already kind of seen even in the last few days the interest levels surrounding that deal and what it's going to do for both in terms of fan engagement, growing the fan base. I mean, as we know, soccer is already the sport now, but certainly the sport of the future, right? We saw record-breaking numbers on TV for the 22 World Cup. We've got the 26 World Cup, obviously, here in North America. And you've got the Women's World Cup in August. Certainly, there's a lot of demand from investors for soccer. USL itself, so we own and operate both men's and women's professional, pre-professional, and youth properties across the states. We have, we will have close to 50 teams across the men's and women's when our women's starts in August 2024, taking the Championship, League One, and our Super League, those three divisions. And we're getting a lot of interest across from family offices, private equity, angel investors. It's funny, coming from England, I see a lot of similarities to where English lower division soccer was in the 80s to where we are now, where it was a businessman or woman, generally a man then, obviously a lot more women now investing in sports than we saw previously. And it's gone from being toys and hobbies to being business entities and being run like businesses, and focus on the commercial side as well as the sporting side. So kind of the excitements we see, we're seeing valuation increases, kind of a CAGR ranging from 40 through 250% since 2015. So the upside's there, the ROI's there, and it's really, we'll go into more details about what are the main areas to look at when you're investing in sports. But I think we've seen it in the last couple of years that pro sports have been inflation hedges. They've also been definitely a way to add more diversification to your standard asset class mix. So for those people who have an alternative asset class, tilt, or have an allocation to that, then sports is definitely something to consider.
You said something, you hinted to something when you were talking, and you talked about this a little bit more in our intro call, that sports is a unique real asset now, and it's not just a product anymore. So
Yeah.
How does that create an opportunity for people that might want to jump into this area then?
And it's very true. I mean, they're definitely unique real assets, like art. They're inflation protected, they're diversifying investment opportunities. There's this imbalance between supply and demand, right? Even if with all the expansion we've seen, particularly in our league, right, where we're getting up to 80 teams by probably the 2026-27 across both men's and women's, you're still limited in terms of there's only one stadium in a market, one team in a market, so you still have that scarcity, and also it's monetized via kind of stable, contracted, recurring revenues from licensing or other partnership deals, etc. The fan base is very sticky. So all of these types of characteristics really align themselves to real assets, and that's definitely what we're seeing from very sophisticated and smart investors who are wanting to have controlling stakes in something like USL clubs versus having a very small percentage in, let's say, a minor in an MLS club or an NFL club or an MLB club. Definitely folks who have dipped their toe into the water in Europe. A lot of American investors have invested in European soccer clubs, and they've seen some really exciting times recently. You look at Wrexham and Leyton Orient and Ipswich, all owned by Americans and all got promotion this year. So they're now seeing USL as a pipeline for player development, as well as a real way that they can impact their local communities, their local cities, and have a very significant ROI.
I want to add too, it's interesting because Dan, you talk about team ownership. There's some interesting things going on. So, Messi obviously, rebuffed a $400 million offer from the Middle East to join MLS in Miami, but also to get a potential ownership stake. Because now what's happening is ownership rules are being relaxed. So you've got, private equity that's coming in, not in all leagues, but it's certainly coming that way. You've got more minority stake interest in the news. Tom Brady, with the Raiders, Manny Machado going to the $500 million MLS franchise in San Diego. But there's really some important legal considerations, because when someone gets a controlling stake, not only does the seller have to approve it, but then the governing body of the league has to approve it. All the other owners have to approve it. Typically it's super majority. So for example, NFL is, is a 24, I believe. And then you've got, these have restrictions on transfer. There's also, if you have a minority interest, you're not going to have any say in the governance. But that said, these are extremely popular because even a minority interest, you're only going to have 15 to 30 minority owners potentially. So these are extremely rare commodities. You look at the valuations, reportedly, I know the NHL franchise just went for $1 billion for the Senators. You've got reportedly, I think 4 million and 6 million in some of the numbers of the franchises that are going. And so the numbers are going to keep going up with gaming and the engagement that people are seeing, these huge media deals. So I think it's a very interesting space. There's a lot of legal considerations, but Dan, to your point, I think there's a huge growth area in terms of investors and institutional investors as well.
Yeah, I think, Jerome, you hit on a really interesting point there. And I think you summarized it well because it's a totally new space. And that's what Dan hit on a little bit too, because 3-4 years ago, none of the, no offense to soccer, Dan, 4 major leagues here in the US allowed institutional investors. And then it started opening up with the NBA and with the NHL and the MLB. And now the NFL is the only one that doesn't actually allow institutional capital. And so it's a total new asset class. And you actually have seen, I think you hit on well, Jerome, some of the key risks, but also upsides. And on the risks, right, I think the biggest in my mind is liquidity. Because if you're a minority investor without any real governance rights and your control investor isn't interested in selling the team, you might be along for a long ride. And so I think a lot of these investors that are going into these kinds of teams, it has to be in sort of evergreen type funds. You can't have a fixed life structure to it. And we haven't really seen a lot of returns yet because it's just so new. I think the Suns, that deal earlier, I think that was earlier this year, whenever it closed, was like really the first example of someone realizing one of those investments on the institutional side. So I think you summarized it well, Jerome. And I think you're going to see more and more of this. And who knows what'll happen with the NFL long term. I think we're certainly paying attention to it. But it's, I think anyone who's thinking about the space from an institutional lens should be fully aware of some of both the benefits and the risks, because there are some meaningful constraints that don't apply to especially more liquid investments.
I think another area kind of worth discussing as we have this conversation, and this might be something Jason can expound upon, is not only direct investment in the teams and the franchises themselves, but all the ancillary opportunities that we're seeing with all the activity around the teams. And Alex, maybe you can speak a little bit about that with some of the strategic things that you're looking at. Jason, maybe you can as well. But I'm thinking also, the opportunities out there for people interested in investing in this sector around gaming and other things that are of interest to the big drivers in this, which is the teams and the franchises themselves.
Yeah, I think, Constantine, there's a few ways to look at it, right? Depending on which seat you're in. So if you're an LP, let's say you're a high net worth investor and you're trying to, put money with a fund. And I think you're going to see, as this kind of Alex was sort of alluding to, a lot of LPs looking, to work with funds where they can get exposure to the asset class, which is, again, a fairly new asset class. So it'll be interesting to watch how much the LPs kind of start to drive that discussion to say, hey, how do I get more of my money exposed to this? Because, not to go into a long kind of diatribe about the shift in kind of goods versus services here, but that's what we're seeing. A lot of this is driven by, in COVID, we had this massive shift on a macro basis into goods. And then now we're seeing almost kind of a revenge move back into services. There's even a phrase out there being coined called revenge travel, because the travel industry is holding up so well, even though the consumer is a little shaky. So you're seeing a lot of that. And then that's kind of coupled with this idea that, it's one of the few remaining kind of event viewing and appointment viewing type opportunities, right, with athletics. So when the streaming and kind of how do people consume media is now very much kind of leaning into these very scarce assets having these, relatively low number of interactions on a live basis. So all of it is creating a really interesting soup to make it very, very bullish for the sector. That's why I think you see these valuations going nothing but up with no end in sight. I mean, what's weird is like I do a lot of consumer products, kind of smaller, looking at the consumer on kind of a lower basis. But you look in, for example, 2022 is a huge year for NFL jersey sales. I think it was one of the biggest ones, if not the biggest year, right? So like there's an idea of, all right, well, the consumer is still very invested in their teams, even though on goods in general, they've shifted. So I think specifically to your point, Constantine, is like, if I'm more of a retail investor, how do I get exposure to what is ultimately a tailwind in this industry? And you have to kind of start looking around the edges, right? I mean, is it an Amazon who buys certain rights and you look at it and say, all right, well, actually, I think they paid a low number, even though it looks big. I think they're going to profit big because of the increased popularity of a certain league. And so then you're investing on more of a retail basis like that, or in gaming, again, kind of these around the edges, because you're not going to get an opportunity to invest directly in the assets themselves, which are, again, they don't come along that often. And it's usually institutions or incredibly wealthy people who are getting those opportunities.
Yeah, and Jason,
also,
sorry,
I'm
go ahead,
sorry.
Constantine.
I was going to say one more thing, which is, not only looking at this as an investor, but as an entrepreneur who has an interest in this area and who sees the momentum in it. And I think this is actually a great segue for Alex, because you're looking at strategic investments, you're looking at what's out there, you're looking at what can be accretive and beneficial to kind of the core mission of the team and the league, et cetera. So that goes to perhaps give us an insight on what you're seeing in the horizon and what you think are interesting opportunities.
Yeah, no, I think whether you're a retail investor or an entrepreneur, I think it's looking at ways you can sort of partner with the league. And so, right, if you're a retail investor, maybe you're not going to have the opportunity to invest in a league or a team directly, but there might be some of the opportunities, whether on the consumer product side, whether it's on the in-stadium experience side, or there's so many different types of partners we have as a league, where the league is putting their investment capital behind, or they've entered into some sort of sponsorship deal or some sort of commercial contract, or it could be on the vendor side where this is a really important way for it's the NFL, for example, to grow the game or support some of our commercial initiatives, and we're entering into a meaningful several $100,000 a year type contract. That's the kind of opportunity I would be focused on. And if you're an entrepreneur, right, I think it's how do you create those kinds of opportunities and then get those inroads with the league or team. But it goes also, especially on the entrepreneur side, it's a little beyond that, because at least the NFL, there's only 32 professional football teams out there. So when we look at opportunities, there has to be, we're not just focused on stuff that is, it's a new bench warmer for the Patriots stadium, right? Like that's great, but there's probably not enough scale there for it to really be an investment versus just a simple, small vendor type contract or small commercial type contract. And so there really has to be scale, certainly outside the individual sport, but across sports, and then maybe in other, non-sports verticals as well. But then also having that tie into football and sports in general.
I wanted to pick up on something Alex said earlier, actually, about the alignment, the time horizon. Certainly, I would agree with that, because look, it goes both ways, right? The league is looking, there needs to be alignment on the time horizon. The league is looking for people or companies that have this longer horizon. They're not looking, this isn't a 2 or 3 year play where you're going to get guaranteed return of whatever X over 3 years. But, these are beachfront properties, right? They're luxury consumable for the wealthy. And, it's weird, at USL, obviously we don't have the maturity of the NFL or NBA, etc. But, it's interesting when I look back recently, I think it was 2007. And forgive me out there if this was 2008. I think it was 2007 when Toronto's expansion in MLS was 10 million. Well, San Diego has just been bought for 500 million. And that was 16 years ago. So, I mean, that's the kind of growth that we've seen in MLS. And I think what, whether, like you said, in NFL, there's only, 32 teams and they're exorbitant prices comparatively, right? When you look at other potential leagues and the opportunities in other sports, I think there's still a big upside here, even though there is this high expansion effort, but there's a structural supply demand imbalance, which creates then that the opportunity. And then the other thing to note, which we can dive into more, is in terms of investments and synergistic investments, stadium development is so key here, and the ancillary real estate opportunity that goes with it. If you look around the country now, no one's just building a stadium in kind of silo. They're all integrated, transformative projects, and kind of that's where our meat and potatoes is now at the USL. That's what we're focused on, because not only then do you sometimes identify an investor who's interested in sports, interested in soccer, interested in their city, but they're also real estate developers who want to drive traffic to an area, want to be able to host 100 different events in that venue, that community living room, as we call it. And so we're finding ourselves, I mean, as Christina says, I head up the expansion and real estate division. That's kind of weird that there's a real estate division at the USL. And the reason is because we're working on 40 or 50 different stadium anchored mixed use developments across the country. And that's how you can identify the type of investor who is looking at this as a long-term horizon.
And I have to say, Dan, in light of what we're seeing in traditional commercial real estate and weakness in that market, this is an incredibly bright spot in terms of commercial development that's not prone to the weaknesses of a traditional, commercial development.
Yeah, I mean, you're right. Look, you need an anchor, right? And sometimes a secondary anchor. And we see some great examples around the country. You look at the Battery in Atlanta. I mean, that is been a tremendous success, despite what a couple of professors of a couple of universities down the road have said. They've really have hit the ball out the park there. And you can see that. But the key is to make the project integrated, not kind of build it and then hope folks come around and develop next to it. The more integrated you make it, you build in ROFRs for, if you're going to invest in the team, you have the first right on the development, things like that. And cities and counties are, they're chomping at the bit for this. I mean, I'm going around the country and, there's cities and counties and states who are seeing the upside here because they know that the average age of a soccer fan's 35 versus a baseball fan's 57. And I love baseball, so I'm a huge Dodgers fan. So, I love baseball and I love American football. But, if you're a mayor, if you're a governor, if you're a head of economic development and you see those numbers, where are you investing your money?
Yeah, and I think to kind of echo something, Constantine, you alluded to about the commercial real estate space, I think you can kind of apply that to a lot of kind of sectors. I think the timing of this call is interesting, this webinar, because I think there's a lot of bearishness across a lot of sectors. And I think a lot of people are going to be kind of wondering where to park capital for the next couple of years and how defensive to be. And and we've seen a lot of weakness in a lot of places. I think this is one market where we haven't, like we've seen strength. And so it feels like it could be a very interesting place to kind of park money and put it to work and kind of in and around what's going on. Again, whether we're talking about real estate in the local market or we're talking about companies that partner with these leagues that seem to be getting a benefit that outweighs the cost, from a marketing standpoint. They're winners, by partnering up with these leagues. So there you're kind of riding that coattail, right? You're kind of you're drafting off of that, where the leagues are kind of the lead dog, but you've got a lot of things that they're dragging with it and dragging it up, and you're trying to invest properly, in those areas. And I think there's a lot of different ways to play it, especially in a market where there's going to be a lot of things that don't look too good for a while.
I think, Jason, to your point, I mean, I'm hearing in the market, funds that let's say, are focused on opportunity zones. So, and with what Dan, you guys are doing with USL, it could be a perfect marriage because some of the sites you guys are picking. And then there's also, there's a VC is overall down, but the amount of VC that's now getting involved in sports and sports related businesses, you've got so many different funds that are coming up, and there's no shortage of people that are interested. And I think, whether they're going to invest directly into a company or put a strategic investment in, take a board observer seat, take a preview for a couple of years, and then decide whether to purchase the company outright. I just see, a lot, and even some of the deals we're involved in. One of our clients is an advisor for Barcode, which is a kind of a next stage energy drink. It was founded by one of the directors of performance for the Knicks, named Bar Malik. They got a fantastic board. They've got an investment from Erewhon Markets. I think they're have not just about to close around. And, I think that companies like that, you talk about where investors are looking, especially high net worth or qualified purchasers. They're looking for those outsized returns, and they want to be able to say, we're going to beat the market. And, so I think there's so many opportunities like that, and more coming.
And certainly, I think companies that can offer products or systems or services that can increase the fan engagement, that, and the immersive experience, right? When we're speaking with potential partners or existing partners, they're not just wanting a billboard or whatever. They want to build something immersive where there really is that connection with the fan. Right. So whether that's in the technology space, digital, it's definitely a key focus for our corporate partnerships team when they're going out. That's the message they hear again and again. And, OTT offers that, the ability, to be able to, press the screen and go to merchandise or open up the sports betting app. Things of that nature is kind of the trend and what we're seeing now, definitely.
I was going to say, Dan, that, the one of kind of the natural avenues here, I think, and you guys can speak to this better, is kind of the move into the digital domain, which I remember going back to the tech bubble days. We were trying to do it with ESPN Ventures and others, but that is a continuing focus, I think, of the leagues, which is how do you continue that engagement? How do you make it more sticky? Whether it be through digital interaction, gamification, other aspects of this, and that's my 2 cents worth. But please feel free to elaborate on any of that.
And Alex, your team was involved with the deal. I believe was Skydance. Maybe you want to elaborate on that one. That would be.
Yeah, sure. I'd love to talk about that one. So I don't know if anyone's heard of the Skydance Media or Skydance Sports in particular, but this is the new partner for NFL Films and also a recipient of 32 equity investment, along with there's a lot of institutional investors in Skydance already. But what we did was form a new joint venture specifically focused on sports. And really the goal of the venture is to be the premier Hollywood film studio for sports content, certainly with a lot of focus on the NFL, which I think is a real benefit for us at the league in terms of amplifying the really great work that we do at NFL Films and just a lot of the really amazing storylines associated with the game of football. Just the human storytelling aspect of it that I think actually is what draws a lot of people into the game. But then also, a lot of other sports content. And I think the reason we wanted to get into this, while we both thought it was an interesting investment opportunity and also a real strategic opportunity for the league, is there's just such demand for kind of non-live game content, especially in the digital world. I don't know about you guys, but for me, when I was cooped up at home in the early days of COVID, like the one thing that got me going was being able to watch, The Last Dance on Sunday night when it came out. And so I think there's so many examples. I think, Drive to Survive is another great example of really utilizing this non-live game content to really build an audience of fans in the US, which has led to their media deal with ESPN going from nothing to, I think it's like $75 million a year now. And so I think just that continuing shift to digital, both for, certain aspects of the live games but especially also some of the non-live game content, is really exciting. I think it creates opportunities for investment as well.
100% agree with that. And this, the shift to DTC and the shoulder programming and this non-live content. I mean, actually, last night I watched the Tour de France thing on Netflix. Fantastic. If anyone out there hasn't watched it, but I think for what we've seen with the Welcome to Wrexham and the other kind of programming recently, where it's about the storytelling, the narrative, and there's a lot of, this is why what we really lean into, or our clubs lean into, is this community focus, this community driven, grassroots led kind of shift. When you have a club in New Mexico United, that's very different from our club Forward Madison, right, in Wisconsin. Very different fan bases, very different kind of brands, but what they've both done really well is integrate their brands in the community and being able to tell that story and be authentic to their communities. We often say, if you look at, we'll use MLS is, the Bud Light, and we're the craft brewing, right? Bud Light gonna sell a shed ton of beers, right? But we're looking at trying to be hyper local, authentic, and I think that's the discrepancy, that's the difference there. So I definitely believe that narrative, that storytelling is going to be key to increasing fan bases and keeping people interested in not only the league but in that specific club. And as we move to DTC, we have streaming, we have fast streaming. I think those are the things that leagues and clubs are going to have to lean into more.
I think you're absolutely right, Dan. I think, storytelling is what we're about as humans. It's what drives us at the end of the day. So having the event is fantastic and it's engaging in that time being, but being able to build up the story around the participants, around the journey, around all of that, I think that's what really kind of builds the fan base and keeps them engaged, and actually builds the next generation too, right? As kids, we grow up hearing about stories. This is another method of storytelling that, if the leagues can continue to go out and put out to the local communities, et cetera, builds that feeling of connection and interest in, okay, what's the next chapter in the story? What's going to happen?
And I think NFL and NFL Films done a phenomenal job with that. I mean, before I was, over here, I remember watching those, old games and with the narration over it, and it's fantastic, and it really makes you feel part of it, and wants to go to a stadium, and I think that's where you can really get that engagement for sure.
I think too, you got even term with storytelling, because I think that was such a smart investment in Skydance. Look at the U.S. Open, right? So you've got the U.S. Open here at LA Country Club, historic. The club has not held an event for tens of years, and basically you've got media parked out there for 3 or 4 days with content. You've got the PGA, obviously LIV merger, Live merger, so you've got tons of storylines. The PGA Championship, you had, I think it was Block was the PGA Pro who ended up making the cut. And so there's I think like you said, storytelling is key, and people are hungry for story, and the sports provides a platform for all these different storylines to come off, kind of like a Star Wars franchises produces The Mandalorian and these different IP properties. So that's really interesting. And then I'm going to segue real quick, because I think PJ Live merger should at least be discussed. I think there's some interesting legal points we don't know all the details, but what we do know is that the Public Investment Fund, which is a $600 billion fund in Saudi Arabia, sovereign wealth fund, is going to have a first right of refusal on all future investments in the new entity. So essentially what that means is they're going to have a potentially financial control of the entity. That we don't have definitive documents yet, but I think that's really interesting for a couple of reasons. One is that the PGA has even admitted that they burned, I think, 50 million in legal fees, and they didn't see themselves able to continue this legal fight for 10 years. And so the merger raises antitrust questions, right? So all of the major leagues have these antitrust exemptions. And so I think that's really key in terms of crafting a competitive advantage, is you really having these antitrust exemptions. So it'll be interesting seeing going forward. There's going to be some antitrust scrutiny in the PGA Live merger, which is not definitive. So we don't know whether it's going to happen or whether it's going to get this oversight approval. So this is going to be a interesting thing for, I think, months and years to come down the line.
Yeah, I mean, I think that
Details than I do, Jerome. Yeah.
yeah, it's interesting on a lot of levels, Jerome. Yeah, I've been following it pretty closely and wondering, just what's going to happen when it gets scrutinized. I know Blumenthal's already started in Congress, kind of asking for a bunch of information that came out this morning, I think. But I think, kind of germane to this discussion, I think what the potential, it seems like, for the big win here is that it now allows golf to be much more flexible in capitalizing on its product, right? I mean, with its 501, C6 status, it was very, very limited, and kind of the new holdco really kind of takes those shackles off, it seems like. And that's kind of the big win for the tour, where you can now, get into all sorts of different, call it profit-making ventures that are, that carry the tour branding, and that you couldn't get into before. And so, I think that's obviously, aside from making the legal battle go away and not having that, cash drain keep going, I think that's really the big win. And I think the other interesting thing, and again, germane kind of to the NFL and the MLS idea here, is, one of the theses around Live was that these teams could have value, that these golf teams could be a franchise that have value. And some of the Live players actually own equity in the team, right? I know Mickelson has a big piece of his team. So that's going to be interesting. And to kind of tie it back to what Alex was saying about Skydance, I think even something like Full Swing did a lot for the PGA, as people are kind of seeing the athletes, at a personal level. But honestly, which has been going on with social media for a long time, but it's interesting when you put a little production behind it, how much extra power it can have, rather than just kind of raw social media presence. So, yeah, I mean, I think it's huge for golf, aside from maybe the controversy around, Saudi Arabia and what that brings.
Mhm.
I think it's going to be a big win for them to be able to actually monetize their value much better.
Definitely humanizes the athletes, right? So that, I think that it gets that emotion for sure. Yeah, I kind of agree that long term it's good for the sport. Morally, I have a lot of issues with it, but I think the way it was being done, as if I was a PGA player, I'd be a little bit annoyed, let's say. But for the fans, it's definitely for the sport itself, it's probably long term, it's the best move.
Yeah, I think kind of related to Live, but less about Live and PIF and PGA in particular, but which I think, Jerome, you might have highlighted, is just sort of the increasing scrutiny from regulators and Congress and sports in general. I think, I'm not as familiar in the weeds on it, but certainly in baseball, you've seen some of this with the treatment of minor league players, for example. I think the NFL is constantly in the spotlight, the Commanders investigation, for example. And so that's just something that you kind of have to navigate if you're a team owner or a league. And as an investor, you kind of also got to keep in mind, because I think there's also a real possibility that, the Live PIF, like, that's going to face, as you said, Blumenthal's leading, that's going to face real antitrust and other constraints that who knows if it ends up truly being consummated the way that it's been announced. And so I do think that's an important consideration too. What are the kind of regulatory slash legislative headwinds and tailwinds? Certainly in the legalized sports betting space, that's kind of everything on the state by state basis in terms of which states are going to legalize when, which politicians think, and so that's an example where you have to be super tuned in.
Absolutely.
We have a lot of questions in the chat, so I think we'll start some of our Q&A a little bit early, guys. And you actually just answered one of them, Alex. One of the questions we had is, do you think the golf deal will run into antitrust issues in the US? So, and then the second part of that question was, do you think Tiger is having regrets about not taking the LIV deal?
I think he's going to be all right.
Probably so. Okay, let's get into.
He doesn't need the money. I will say too, there's talks about penalties for players coming back and also players getting a potential equity stake in the new holdco that Jason referenced. So that I don't think Tiger doubts it, is regretting it, but it remains to be seen what's going to happen.
No, but I bet a lot of other ones are. And, the reality is they're not going to ask the Phil Mickelsons, et cetera, to pay back all that money, right? So, I definitely think like it would leave a nasty taste in a lot of let's say the medium level player or even the top level players. But yeah,
I think so.
I do think, Christina, one maybe side point of that, I think not a lot, but I think a major point in the antitrust battle is going to be, what do they do with the LIV players coming back? How much do they try to penalize them or keep them from being able to participate in what will now be the only professional tour really in the world, because now it's DP and PGA effectively, so I think the harsher they are on the LIV players trying to come back, the worse it is for them from an antitrust perspective.
I believe that's true.
Yeah. All right, let's get to some of our other questions. We have, this is a great question. How important do you think the Apple MLS deal will be to the value of soccer club investments?
Yeah, it's a great question. And it's interesting. So I have a personal opinion on this, just looking at soccer generally in the US. Soccer in the US has been a very localized sport. It's why the TV audiences have typically at the club level not been that great, right? Because what we have the EPL shown here, we have the Bundesliga or La Liga. So those are the pinnacle of the sports. Like the pinnacle of soccer is in Europe, right? So that, or club sports in Europe, club soccer. So that's why, people have their local club here in the States, and then they'll go home and they'll watch the Premier League on TV at the weekends, right? I live in Tampa. I go down to see the Tampa Bay Rowdies. But the reason I go is because it's where I live, right? If I lived in Portland, I'm not watching Tampa Bay Rowdies, right? But I'll watch Arsenal or Man City, Man United, Tottenham, whoever, right? So that's where I think MLS has struggled in terms of the TV viewerships, because it's always been very localized. And so the Apple deal is, I think, look, did Apple know about Messi? Maybe, I don't know. Was this in the works for a number of years? I mean, it's worked out very well for them, because now obviously you're going to get more, let's say, the casual fans who may get subscriptions because they want to watch Messi. Some of the feedback I've heard just generally is, look, if you are a casual fan and you're surfing on the TV, you might stumble across a game. When it's behind the paywall, when it's all the games are on at the same time, that's kind of restricted maybe the casual fan from purchasing subscriptions for it. So it's going to be interesting what happens. Certainly our league is not dominated by media revenues, right? Our clubs earn their money through their four-walled revenues. Unlike, you go to Premier League, you get relegated, it's potentially up to 80-90% of your annual revenues because the media deal goes away. Our clubs are focused on ticket sales, sponsorship, merchandise, concessions, parking, right? So those areas are all about bums on seats, right? Getting people to the games and the flywheel effect that goes from there. So it's going to be interesting to see what happens. Obviously, MLS is trying to be a top 3 league in the world. The media deal is a huge part of that. They want to compete against the Premier League, La Liga, and broadcasting here. It's going to be interesting for me personally. The most exciting thing with Messi is I would love to see what difference that's going to make on kind of TV viewership, because I know it's going to drive attendances. Some of these clubs will go to NFL stadiums because their MLS stadium won't be big enough to hold it. Right? We've already kind of seen that, so it's going to be an interesting one.
Yeah, I think just to pick up on what Dan left off, I think, you kind of hit on a key point, which is kind of the more mature league you are, in general, the more you rely on media revenue. Right, the NFL, majority of the revenue is from the media deals. A league like the USL, it's a relatively small portion. So that's, the MLS is somewhere in between. I think I don't know the exact breakdown of how media contributes to their total revenue, but it's not everything, but it is a very important piece. And then in terms of viewership, I think Dan highlighted another key point where, right, whenever you at like the NFL, when the NFL looks at negotiating media deals, it's always sort of a balance between maximizing viewership versus economics. And it, I think Dan kind of posed the question of it's unclear, right? How did maybe Apple was the highest bidder, but how does viewership on Apple compare to if it were on a traditional cable network or broadcast network? I think as, like we talked about earlier, we move more and more towards the digital and D2C world, right? There's maybe less of a trade-off there, right? There's more and more cord cutters. And so, maybe there's not as much of a trade-off, but certainly you have to kind of think about the long-term growing the fan, making sure your game's available with kind of maybe maximizing your economics. And that's, I think, a trade-off that really every league, or at least grapples with when they're negotiating these really monumental media deals.
Yeah, and so just to follow up from Roland, I see on the Q&A, $7 a month for Apple TV isn't much of a paywall. I agree if you're a dedicated soccer fan, but it's what $80 odd a year. That may turn off people who might have watched games if it was on just their local networks. And so that is it's definitely a consideration. But Alex is right. It's not all about who pays the most money. It's also about the branding and what all the knock-on effects from that.
So maybe we covered this a little bit, but we've got Shikar asking this question. What are the specific things that what does an investor look like when he wants to invest in a club?
Depends on the club, right? I mean, it's
well,
yeah.
there's some keys. I
Right.
mean, if you're an investor, firstly, obviously you're looking at the market. Now, again, our league's very, very different from, NFL or MLB, but, they're looking at the top 20 or 30 MSAs, right? We're going after maybe MSAs 30 through 100. MSA's market, for those on the call who don't know what MSA is. So, the reality is the population is not a high correlation to success for the club. That's a fallacy. It's a misnomer. We're talking about kind of 5 to 15,000 fans at games. The markets we're going into, the drivers are clear. It's having an active local ownership. It's having a well-located stadium, and it's investment in your front office. Because if you're trying to save for success, you're going about it the wrong way. You've got to invest for success. You've got to hire good front office staff. You've got to identify that right stadium project, which again, why thinking big is better in that regard. Not just leasing an existing venue or whatever it is, where you might not have inventory, you may not have concessions, parking, all of those aspects as well. So those are the core tenets and the core pillars between what you're looking at in terms of investment. But it's really, that's what the league's looking for. We're looking for active investors who maybe have had sports experience or can bring real estate or bring other value adds. And that's why having an ownership group is so important, because you can add different aspects, each of you.
I think I'll add too, and Alex probably could fill in here, but there's the controlling owner and the minority owner. So in terms of the controlling owner, there's net worth requirements, there's extensive due diligence. So any investor in a sports team is opening themselves up to extraordinary amount of due diligence. Again, you're getting league and owner approval, supermajority approval. There's debt limits that are involved, and that's part of the reason why some of these new ownership groups are bringing in institutional capital, just because the team values have gotten so big now that it's difficult for an individual owner to bite the whole apple. So, there's reports of, ownership interests between, 20 to 40 up to 100 million in some of these clubs that were being offered to help with some of the capital needs. But yeah, these are extraordinary purchases. They range depending on league, league size and number. Probably Alex, you probably can speak to this more as well.
Yeah, no, I think that's well said. There's also like limits on the number of, for an institutional investor, for example, limits to the number of investments you're able to make per league that the league set, limits the total amount of institutional capital ownership in a given team. Where you're not, at least in the domestically here in the US, you're not seeing institutional investors take majority stakes. It's not allowed, unlike in like European soccer, for example. So I think, Jerome, you had a lot of the key highlights, and I think just in general, like part of the reason for the increased institutional capital, it's a mix of, I don't know if it's demand and supply is the right word, but right, there's both demand from individual investors, but also there's sort of a need because of just how high some of the valuations have gotten, that when you have some of these debt limits and just other restrictors, having another source of capital, makes transactions, whether it's a secondary transaction or a control sale, easier to facilitate.
Yeah, Jerome, while we're at it then, obviously it is league dependent. So for example, our league has bifurcated ownership. So the clubs are independent of the league. We need 35% individual, who's that principal team owner. And then you can fill in the gaps from there. That's a US Soccer Federation mandate to have that 35% person who is an individual. And then, franchise fees are ranging from 5 to 20 million, depending on the property, whether it's USL Championship, League One, or the Super League. So those are kind of the basic framework around the ownership for our league.
All right, we have another question from Io. What do you consider investment quality sports assets? Do you consider minor league sports teams as an investment vehicle?
I mean, I would say the first thing is the league that you're investing in. That's key, right? Obviously, your local performance is very, very important. But at the end of the day, a big driver of your valuations is the league that you're in. And so, you see that when we're speaking with the CA icons of the world who are doing valuation of our clubs and others, their model, there's a portion of that is purely related to the league and comparable benchmarks recently, not just the local revenues of that team. So I obviously I might be biased, but firstly I would say USL is not minor league, it's lower league, a big distinction, and one of them is structural. Our teams play MLS, right, in the Open Cup. So you don't see that in minor league hockey, minor league baseball. So, our players live in market, they represent their communities. They're not farm teams for bigger markets where the players go. If you have a player who's better than the league that's representing, that's great because you can sell that player globally. There's a global market for soccer players. So part of your business, what we've seen with clubs, so particularly over the last couple of years, has been the investment in your players. Players are assets, not liabilities. And so, definitely, I think there is a gold rush for US soccer players now. We've seen the move to Europe over the last few years, and that will continue, which is why we're getting a lot of interest from European clubs, Mexican clubs, because they want to get a base, they want a US club base as for their pipeline of players, because given the FIFA rules, if you don't have a presence, you've got to wait until the kid's 18 before you can buy them. By that time, they're already kind of tapped up and already made their choice. So, we just had our biggest sale of our club to Benfica for 1.5 million. So when you're talking operating budgets of 5 to 12 million, 1.5 million's, a decent amount. So that will only increase rapidly now since we've got those comparables. And so I think when you look at sports betting, you look at venue revenue optimization and the ancillary development we talked about. You look at the year-on-year sponsorship, ticketing, concessions, consumer products, media rights, digital, player transfers. I mean, we're at the kind of the tip of the iceberg now. And I think certainly depending on the league, there is a great appetite for minor league and lower league sports.
Yeah, I would echo that, Christina. I would say that in baseball, and we've seen it firsthand here. And I'm in Charlotte, North Carolina, and we don't have a Major League Baseball team. We have a AAA affiliate of the White Sox, and build a huge new stadium in the right in Uptown. It stays pretty full, and people come out. And the truth is, because it's AAA, players rotate in and out all the time, so you don't really have a chance to get an attachment to any of the players. But it doesn't keep people from coming out and enjoying it, because again, it's that shift of where do people want to spend their money? What do they want to do with it? Going out to a minor league baseball game, ticket prices are still relatively reasonable. It's a fun experience. And I think that's a place too, where, to kind of Dan's point of view, the individual operator makes a ton of difference. You see like the talk of minor league baseball is a little team in Georgia called the Savannah Bananas. If you haven't seen any of their clips, you go check them out. Like, they're a good example of how to take something and really blow it up with a very interesting and entertaining approach. So yeah, I would say for sure it seems to be that kind of tide is raising minor league baseball fortunes as well. So not a bad place to look either.
Right.
And most of the teams are independently owned and then just affiliated with a major league team.
Yeah, it's interesting when, with conversations I have a lot, investors say, oh, I want USL Championship. I don't want USL League One because I think there's a ceiling to League One. I'm like, with all due respect, that's nonsense, because it's all about how well you operate. Look at minor league baseball, where you have single A, double A, triple A. Who's top of the charts in minor league baseball? Dayton Dragons. Double A. They get 8,000 fans a game. I mean, let's be honest, in America, in this country, people differentiate between major and minor leagues. They don't really nuance between what level of minor league. So, it really is about how you operate, how you integrate your brand. And that, like I said, the investment in your front office. I think it's fair to say in the minor league space, you are selling tickets rather than people buying tickets. And that's a massive difference. Like in the Premier League, people buy tickets.
Right.
Take Sport KC as an example in MLS. When they built their stadium, they had, I believe, around about 40 ticket execs to sell that stadium out. Now they have 7 or 8. And because again, once you've got the fans, they're sticky. You put on a good product in a nice venue with good food and beverage, and they'll keep coming back. But you have got to, that first season is so integral.
Such a great point. Being a buyer versus a seller. The tickets, that's such a great point.
All right, we have one last question from Jeff. It says, what do you see as the most significant challenges for investors going forward? For example, some European football clubs can be purchased for a low price, but their operating costs are huge. Anyone want to answer that question about what are the significant challenges going forward?
I think Dan hit a little bit earlier. It really depends on, like, if you're looking at a sports asset, the league, right? The challenges for NFL and NFL ownership are very different than, for example, European soccer. It can be highly variable. You can get relegated, promoted. You basically are buying players versus a salary cap system in the leagues here. So, leagues that have more, higher contracted revenue, that have labor deals such as salary caps, those are a little bit less risky versus ones that don't have sort of that structure in place. If anyone wants to elaborate on that, Dan, I know you probably know the space well.
Yeah, I mean, I think that's you nailed a couple of them for sure. The challenge is really how much time you're going to be able to devote to it as well. And again, I'm talking it from my perspective rather than obviously some of the big leagues. I think clubs that have faced the biggest challenge have had absentee ownership. it really, you know, these are community-led clubs. And so if you are active, and I think that's what excites a lot of people, they want to get involved. We're doing a deal with a gentleman in a local market in Florida, and you know, he's going to be leaving his career to run the club, because he's had a very successful business career. He's reached the point in his career where he wants to do something he's passionate about, which he believes that there's a real return on investment as well. So he's bringing him and some friends and colleagues and other networks to do it. I'm very excited by that, because I know, you know, he's been very, very successful in the merchandising space and, you know, in B2C. So I think that it's not rocket science. I mean, certainly you know, if you have the right acumen and the ability to capitalize the club, the challenge is if you don't have the liquidity, you know, the cash flow to invest for a long time horizon. You know, you've got to expect losses in the first few years, unless you absolutely nail it. I mean, you know, we had a club 3 years ago that in their first year they did $2 million in merchandise, and they made a 7-figure profit in their first year. You know, that I'm not going to sit here and say people who live in that market bought a lot more stuff than other markets. No, they just did a damn good job in the consumer products area. So, you know, every market's going to have its different challenges. You just got to make sure you lean into the thing that is available for you in that market.
Nice.
Amazing. Okay, wait, one last minute question, Dan. I think you might be able to answer this in 30 seconds or less. Is, do we know the planned expansion teams for MLS? We'll end it there.
Yeah, it was in the news, San Diego.
There it is. Okay, great. Well, we just want to thank everyone for joining us today on this webinar. Again, this will be recorded, so we'll send this out to everyone. Thank you to our panelists for joining us today. It was such a pleasure. Thank you just for taking the time out to contribute, and we hope that everyone has a great day. Thank you so much for joining us.
Special
Thanks,
thank you,
everybody. Thanks, Christina.
Jason, Alex, Dan.
Thanks, guys.
Especially for joining us. Thank you so much.
Thank you, guys.
Appreciate it. Take care, guys.
Have a good day.
Take care.
Bye.